UCITS had a record-breaking year in 2025, with net sales reaching 814 billion, the highest ever. Bond UCITS saw the strongest net inflows in 2025, amid major central banks continuing their rate cuts. Equity UCITS also saw strong net sales, as stock markets performed rather well, with European stocks showing especially strong returns. Multi-asset UCITS flows returned to positive territory after 2 years of net outflows. There were also robust inflows into money market funds, indicating that some investors adopted a more cautious stance in a year full of geopolitical uncertainty and currency volatility. The rush into ETFs continued. For the third year in a row, net sales of ETFs reached a new record. ETF inflows were primarily driven by equity funds. In fact, all net inflows into equity UCITS in 2025 were driven by ETFs. Non-ETF equity funds actually saw net outflows throughout 2025. This was the third year of net outflows from non-equity ETFs. In the bond fund market, the situation was different, with both ETF and non-ETF bond UCITS seeing solid net inflows in 2025. In 2025, retail investors in Europe recorded a new all-time high in net fund acquisitions, 295 billion euro. Flows were positive in all but 3 countries, indicating a broad-based trend across Europe. On the other hand, direct bond purchases dwindled in 2025, and direct savings in listed stocks have been close to zero for years. This confirms that European retail investors rely almost exclusively on investment funds to gain direct exposure to capital markets. Fund costs have come down across the board for all major long-term UCITS types. Equity UCITS saw their average cost gradually drop over the past 5 years, declining by 18 basis points. Average cost of bond UCITS fell by 5 basis points over the same period. Multi-asset UCITS remained pricier than other funds, as these funds often employ more sophisticated strategies or complex asset allocations. Costs have barely changed in recent years, with fees decreasing by only 1 basis point. With an average cost of just 0.18%, money market funds are significantly cheaper than other funds. But fees have crept up in recent years, mainly due to exchange rate fluctuations. The total share of EU domiciled funds that are cross-border grew from about 49% in 2015 to 55% by 2025. The share of cross-border funds held in another EU country grew the most, confirming the vitality of the single market for UCITS and AIFs within the EU. Funds held outside Europe also saw their share increase briskly, underscoring the status of UCITS as one of the EU's most successful financial export products. UCITS are now sold in over 50 countries beyond the EU, particularly in Asia, South America, and the Middle East.